Hello traders, welcome on a daily analytical report with Alpari. My name is Tomasz Wiśniewski, I'm a chief analyst in Alpari Research and Analysis. And we start a very important week. Well, we started it yesterday, but the volatility will increase from today. Yesterday not much happened. Why is it an important week? Well, we do have many central banks deciding about the interest rates. The most important one is Fed. We will have a decision on Wednesday. Rate hike is almost certain. It's around 100%, so it is certain. If anything is certain on the financial markets. And we are waiting ahead of this decision. Also, what we do have are elections in Netherlands, which should have a medium impact on European stocks and on euro itself. Apart from that, let me show you the macro calendar, what we should expect on the market. As you can see here, what we still have today in the calendar is labor market conditions, but it's not an influential data for today. More or less everything was shown already. So we had retail sales from China dropping from the previous number, but also lower number than expected. Luckily, industrial production was a bit better. CPI from Eurozone came as expected. Industrial production from Eurozone. CPI from Germany came as expected, and the industrial production from Eurozone came much worse than expected. But look what's going to happen tomorrow. We'll have retail sales. We will have CPI from United States and FOMC in the evening. So tomorrow, an important data for American dollar as well for the whole market. Important data from United States. On Thursday, interest rates marathon. Right, so we start with Fed on Wednesday evening, and after that we go to Japan, we go to SNB, and we go to Bank of England. So very, very interesting times in terms of the policy of central banks. But tomorrow volatility should be much higher because of the retail sales, CPI from United States, and definitely FOMC interest rate decision, their economic projection, and maybe we'll get something during the press conference, some influential data. Technically, what I would like to tell you is, well, we were ahead of the Wednesday's Dutch elections in Netherlands. Stocks are relatively mixed. Still, obviously, the buy signal is on stocks, but we're not making higher highs and higher lows. We're more or less in the side trends, now. We have a huge drop on oil. It's a consecutive 6-day drop, and also British pound is much weaker. Why is that? Well, Theresa May got permission to trigger the Brexit. Right? It's kind of a delayed reaction for this, that we finally have a decision, have a agreement that Article 50 and the process of Britain leaving from Eurozone can be triggered. From the central banks, Bank of England, SNB, Bank of Japan, also from emerging markets, Bank of Indonesia are expected. We are waiting for the interest rate decision, but they are expected to keep monetary policies unchanged. Also, we have G20 finance ministers. They will gather in Germany for a series of meetings. It can be influential. But also, what we do have a Trump Merkel meeting, but I think that was postponed because of the blizzard. But we'll see how the situation will develop. But also this week Trump is expected to unveil his budget, so it also will be influential on the situation on the market. So let's take a look on the charts from the technical point of view right now. Fundamentally, that would be it. Fundamentally, we are sorted, I guess. So we can check the technical situation on the chart. Maybe let me start with DAX. As I said, sentiment is still positive, right? Why is that? We are above the trend line. Also, we are above a horizontal support here, which was few times tested last week. Actually, whole last week was about defending this very important support. It was under the pressure and it got defended. We'll see if this week we will also have a test of this support or not. If we are here, let me show you oil with a catastrophic. Last week we broke the lower line of the pennant, we broke a first horizontal support, then we broke 38.2 Fibonacci level, which was for some time it was a support, and after that it was a resistance. Then we challenged 50% Fibonacci and the previous highs from 22nd of November, and as you can see it's defending. They're trying to defend it. But sentiment on oil is definitely negative, so those cuts made by OPEC are used by other countries to increase the production, which we can see in rising inventories in United States, for example. So this scenario, which was expected by us, and I was telling you about that many times, that it's probably gonna happen, that OPEC countries can cut. Even I was surprised that they cut. I thought that they won't do it, but okay, they were committed. They cut the output, but it was used by non-OPEC countries to increase the production. They used this spike in the prices. Every cent higher is millions of dollars for those countries. So I'm not surprised that this scenario happened. And we have the situation as follows. So we do have a downtrend now. Well, we do have a very volatile and brutal comeback to the downtrend on oil. And that's what the midterm sentiment on oil is at the moment. Let's move to currencies. On currencies, I will tell you about the instruments. First, from the trading sniper, from our short video review of the best trading occasions. So euro dollar, which you know that I'm not the biggest fan of euro dollar, but currently we can spot an interesting trading opportunity on euro dollar. It's not happening very often. Usually euro dollar is not giving us good setups. It's not trading technically well, at least according to my view of the price action trading. But what we're having here was this resistance, which was with us for the last 3 weeks, and this resistance restricted the sideways trend. There was also the support here, and we are wondering if the support will be broken or the resistance. Buyers choose the resistance to be broken. It happened at after non-farm payrolls. As you can see, upswing here, retracement, further upswing. Then this movement was retraced a little bit yesterday. We are having a bearish reaction here again, but this is just a normal test of this line as a closest support. Also, this can be considered as an inverse head and shoulder formation, left shoulder, head, right shoulder, which makes this line a neckline. So this movement is not a surprise, but the thing is that if the buyers want to think about the positive sentiment about the buy signal here, they need to defend this level. When this level will be defended, that will be an invitation for a long position. So far it looks promising, but unfortunately we do not have a buy signal yet. This is just a potentially good support, but for the buy signal using the price action trading, you need to see a reaction here, you need to see a bullish movement here. You need to see demand, you need to see sellers closing positions and buyers opening new orders. We do not have that so far, but we are on a good way to do that. But patience here, patience is gold. We have to wait. Interesting situation. So on euro to American dollar, we do not have a signal yet, to be honest with you, but this signal is already present on euro to British pound, where we had this head and shoulder formation, which was wasted because traders, instead of breaking the neckline here along with the trend line, they defended this line and they broke the upper line connecting recent lower highs, and at the same time a head and a right shoulder. So instead of head and shoulder formation, this is a symmetric triangle, and then we got a breakout of the resistance of the symmetric triangle, which creates a sell signal here. Basically what it is, it's buy signal with a potential target here, 80 pips. Regarding the potential stop loss, this is not the best trade in terms of the risk to reward ratio, because it's merely 1-to-1. But if you believe in that this breakout from the symmetric triangle is strong, we should expect a bigger movement here. So we should expect like let's say 400 pips upswing. So a stop loss for 50-70 pips looks reasonable then. Next instrument I have for you, which I discussed on the Trading Snipers, Australian dollar to American dollar, where in the long term, you know, where we bounce from this horizontal resistance. So it's now time for a correction. It's just a correction, still just a correction, because we're above 88.2 Fibonacci level. But in the midterm, what we are having here is a start of a downtrend, then a pennant breakout, then a flag breakout, then a wedge, then a breakout, then a flag, then a breakout. Alright, this is all those are trend continuation patterns, and look at that. What we're having here is a bearish breakout from the trend continuation pattern, so it shows us that the trend should be continued, and also we bounce from the trend line here. So we bounce from two important resistances in the same time, which creates a chance for a further downswing. But I wouldn't be so sure about, because when we look at the bigger time frame, we can see that this is As long as we stay above 38.2 Fibonacci level, the sentiment is positive. And so if you believe in that, we can connect those two approaches. So for example, a short-term sell signal here, aiming 38.2 Fibonacci level. On 38.2 Fibonacci level, you switch to a higher time frame and you close your short position, you open long position with a potential inverse head and shoulder position then, and a breakout of the uptrend line here, which creates a very good bullish occasion here. So that can be scenario for Australian dollar to American dollar if they would like to be very technical. Euro to Australian dollar. Here the price attacked on the horizontal resistance here. This attack can finish with the false breakout pattern. Also, if we take a look on the lower time frames, what we're seeing here is a kind of head and shoulder formation here, right? Left shoulder, head, and right shoulder. If we will be able to break the neckline and maybe this horizontal support, and that will create a sell signal here on this instrument, Euro to Australian dollar. So well, at least for now, the buy potential here is over. The buy signal will be restored once we will be able to come back above red line, and coming back above the red line can be a very strong buy signal here on this instrument. Gold. Gold is trying to correct a little bit, but this correction is mild so far. It's not significant. We are not seeing here any reversal pattern. So even if the gold is heading higher, I do not see a potential reversal. I will see a reversal once I will see a price above the green line. Chances for that are now rather limited, because even when the price will get there, that will be a sell signal here, price testing recent support as the closest resistance. Obviously, again, I'm telling you that you have to wait for the price actually to show you if this resistance was rejected, accepted, etc., etc. You need to wait for a price reaction, because if you won't wait for that, you will trade only on your assumption that there is a support or a resistance. It's only your assumption. But if you will wait for a reaction, you will trade what actually is on the market. You will trade the market sentiment. You will trade the real market situation, not just an assumption. Euro to Japanese yen was having a very good time here. Now it's time to take profits, especially on H4 chart, when we will see this pin bar here, and the next candle that is following that, we may be expecting a bigger drop. After that, maybe a correction, end of the correction and further upswing. American dollar to Mexican peso. Well, here the situation, technical situation stopped being interesting recently, so we defended this horizontal support, and now we're just waiting for further market attractions. As we can see, traders are now trying to pull the inverse head and shoulder formation out of it. So left shoulder head, and we are trying to create a right shoulder. If neckline is here, this red line, if we will be able to break the neckline, that will create a short-term buy signal here to this resistance, to this horizontal resistance. If this horizontal resistance will be broken, that will create a mid-term buy signal. So far it is bearish because we are staying below the trend line and the neckline. On New Zealand dollar to Japanese yen, I was hoping for this beautiful retracement here. That would be perfect if the price would get here, bounce both from the trend line and from the horizontal resistance. But as you can see, they do not want to follow that. But again, the sentiment is still negative. This situation shouldn't change. If you want to buy here, I wouldn't recommend that. buying here only above the after the price would break the horizontal resistance here. Canadian dollar to Swiss franc. What we're having here is a defense of this horizontal support, but we're having another attack on this support, right? So this can be a potentially very good place for a pending order for traders going for breakouts. But again, we have to see, we have to wait for the price to show us the direction. Canadian dollar to Japanese yen was doing very good at the end of last week. They had this buy signal, but now they are giving it back a little, well, not maybe a little bit, but quite a lot. So it's not only that, I'm sorry, show. I don't think that buy signal here is on the table anymore. I wouldn't be so kind in getting into a long position here. Possibly there is the place for the last support here. So crossing of horizontal support, but also a lower line connecting recent higher lows. Once we'll have a breakout here, that will be the end of an upswing on this instrument. Once the price will get there, that will be a strong sell signal. American dollar to Japanese yen on a daily chart. Look at that, they created a very dangerous hammer. I was thinking about going short here on this instrument yesterday, but this candlestick wasn't convincing. I was thinking about that late in the afternoon, late in the evening, but that candlestick wasn't convincing for me, especially that, as you can see, from the whole day they were just advancing higher and higher and higher. Well, on a daily chart it looks promising, especially that if we will follow with this candlestick, that will be a strong sell. Maybe not strong, but that will be a significant signal for many traders to go short. Alright, so there is a high chance for a downswing here, but again we have to wait. In my opinion, the closest support are weekly lows, right? So lows from the beginning of the week. If we will be able to set new lows on this instrument, that will trigger sell signal. Australian dollar to Swiss franc. What we're having here is price was creating head and shoulder formation, then they bounce from the horizontal support. It's a bit complicated scheme here, a bit complicated pattern, not very clear, but I would say that if I had to trade, I would go short here, mostly due to the fact that we bounced from the trend line here, and we are below the green horizontal resistance with a potential for a further downswing. Next instrument I have for you is long-term opportunity on Australian dollar to New Zealand dollar. Here it looks very good. It looks like a decent formation. So what do we have here? Maybe we start with a weekly chart. It's a breakout of the weekly downtrend, of a long-term downtrend, which started in 2011, right? So pretty significant thing is happening right now. On a daily chart, what you can see is that reversal, that this upswing is made by inverse head and shoulder formation here, left shoulder, head and right shoulder. We broke the neckline, which triggered an upswing. Upswing broke the trend line, and this gave momentum for a further upswing. So sentiment here is positive. But the thing is that it's a long-term opportunity for many few months at least. So you need to have quite wide stop loss. Unfortunately, swaps for long positions long position is 1.56 minus. So it's not the best occasion for carry trading. So you have to be aware of that. But the thing is also that, for example, the closest resistance is here, and this resistance is 360 pips, and the closest support would be 90 pips. So it's 4 to 1 risk to reward ratio on this trade, which is a reasonable amount of risk that you can take and the amount of money that you can win, right? This is my view on this instrument. My view on this instrument is that the price will test this horizontal resistance anytime, not soon, but in the next few weeks. American dollar to Polish zloty, as you can see, it's a boring side trend which started on Valentine's Day, 14th of February. It's a boring side trend, but we are below 38.2 Fibonacci level. This is a rectangle. Rectangle is a trend continuation pattern. Trend in this case is negative, so what we should see is a breakout of 23.6 Fibonacci level, and we should see price falling at least to this support below psychological barriers of 4 zlotys for $1. That is my base scenario, but obviously technical analysis will be crushed on Monday. On Monday, only fundamentals will be important. Let me remind you that usually when you have FOMC, the market is very quiet during Wednesday for the before the FOMC, and after that we're having a volatile movement. So you have to be aware of that. You have to remember that. Well, today is Tuesday. We shouldn't get any significant movements, as also we shouldn't get any significant movements tomorrow. So we just patiently tomorrow before FOMC. So on this instrument, we probably won't see a breakout before FOMC. So I don't think there is a logic behind that to enter the market. Obviously, if you want to feel a thrill and try to invest, try to catch a movement, you can take a risk. But for me, trading is more or less about avoiding the risk than taking an excessive risk. Let me come back to the euro dollar, where we're having the battle for this horizontal support. And as you can see, again, don't take the support for granted. You need to see proper reversal here. So far, we do not have this reversal, and the price is going down. And also, Australian dollar to American dollar, what we are having here is price is respecting this trend line. So price should go down here. Euro to British pound is having no problems with sustaining this upswing. Euro to Australian dollar mixed, where also we had something interesting. New Zealand dollar to Japanese yen. I would love to see the price getting there, but I think chances for that are rather limited. Australian dollar to New Zealand dollar. Here we had a nice trading opportunity, which is a long position here. Hey, thanks guys for watching daily analytical report. Obviously, you have to keep in mind that trading and investment in financial markets involves an element of risk. For more information, you have to follow our Twitter account, because we post there excellent trading ideas. So follow us on Twitter, and obviously our website alpari.news. Thanks very much. and now a short break, and after that webinar about Forex basics.